What's up, guys? Talk about market open longs. Pretty sick. I meant to make a 10H video yesterday. But market open longs, when liquidity comes back into the market, we kind of had what most of, I would say, the second half of April and a lot of May. Kind of be a lower liquidity environment, right? Still got some longs, still got some manipulation, but nothing insane, nothing. It wasn't anything like beginning of April, end of March, right? The last time we had market conditions like this, right? So, market conditions along with volume are the two main factors. I always tell my Discord room that, the first thing you always look at, is volume and market conditions. And then you can look at the chart, right? Without the right volume and the right market conditions and understanding what types of moves are being made, candlestick patterns don't matter as much. But then once you have an increasingly stronger market, moves like FFIE always bring in volume, right? We saw this with TPST. We saw it with anytime you get these like 2,000, 3,000% squeezers on, hundreds of millions of shares of volume, that's going to have lasting effects, in the aftermath, right? You're just going to get more range on stocks. There's more liquidity. And when that happens, logging becomes insanely profitable, right? Shorting, we've seen with plays like yesterday with GTBC, or whatever that ticker was. Today with, God, what was the ticker today? Sorry, man, BDRX. Got like 3 hours of sleep. Where you start to get, in a stronger market, you start to get long traps that happen in the pre-market or happen near market open, and they turn into short traps, right? You get something that looks like a nice pattern, some type of we got a big up only move, get a pullback, get another aggressive move towards highs, or maybe even swipes high day. And it looks like a great short, and you take it, and you get confirmation. You can get, and the range in these plays is so huge. You can still get like 20-25% confirmation on your short. I'll show you my BDRX short. But there's, as long as the volume's there, those long traps usually become lower highs that get squeezed later, right? And if you're short only, it can become very frustrating, especially if you're used to only shorting in the pre-market or market open. It could be very frustrating because patterns that usually work in weaker markets stop working. On the flip side, market open longs become great. So what do we know about market open longs? Market open longs are best on bottomed out. I love to see these like quick pops, right? I have a channel on my Discord that kind of tracks these, where you get, a quick pre-market pop, and in really strong markets, the range is absolutely nutty on these plays. But I love these walk downs, right? This is just a 50% pullback in the open, nothing but lower highs. Super bullish, potentially bullish, right? A lot of times, if you go to Mikey Underdog's channel, Mikey Mad Dog, I think is his YouTube channel now. I got to update the link in my profile, but he goes over looking at daily support levels, right? Kind of things in terms of where stocks previously broke down, potential gap fills, on a daily time frame. And he had this section marked as potential support, right? So Mike is great at those. I'm more of a looking at the intraday structure, but both things work. But in terms of market open longs, I always tell, I was telling my Discord yesterday, telling it today. I was like, hey, what I'm going to be doing is I'm going to be cycling through, because there's about 4 or 5 names today that kind of had a walk down pre-market structure, right? Where It was a bunch of lower highs and lower lows in the market open. And the number one thing I'm looking at when I'm cycling through these walk down names is the volume, right? I really want to see, 500,000, 1 million shares a minute, something like that, as opposed to 100, 200, 300K. I want something a little higher. And also, if I see the volume come in, I usually want a pullback into bids, right? A pullback into a bid structure. And at market open, these patterns could be super quick. So a lot of times those pullbacks could be just a pullback on the 1 minute chart, right? It could be a 1 minute red candle into some bids, right? So MGRX, I love the structure. I love that it was walked down like 50%. Um, Ironically, I like how it dumped into the open, right? That actually makes it even more bullish. It's just one of those counterintuitive things. Um, and this had great bids. You'll see why, I went in, really big on this 934 candle. The bid support and the volume was great, right? And I think this might have been SSR. It was SSR. I tend to think my general opinion is SSR is a minor bullish factor on these walk down plays, right? Um, and the range is so nutty. I went long, and 2 minutes later, it's up 20%, even though it barely seems like it moved. Um, but yeah, we'll look at the volume. Apparently, I don't have my thing open. There we go. All right, we'll look at this. Also, it's trading over 1 million shares per minute on this pop. That's a lot of potential accumulation, right? This pop wasn't 50K or 100K. This was 1 million shares per minute consistently. So nice pre-market volume, massive walk down into the open, and then pretty much it started trading 900K per minute. And I was watching this pullback, and we'll look at the book really fast. So I thought this was great. And this is really the type of market. You'll see my longs. One of the first longs I ever did was on VS on the day that I think it was the TPS. It was a very similar situation where TPST made a huge move, and then plays like Seco and OPGN and VS and all these plays the next day were popping on volume, and VS had a similar dump structure with a ton of volume, and that ended up being a 150% long. But yeah, here's the volume. Here's that like 900K coming in. Again, not a lot of bids. Now, petty books could be a little different than low float books on stocks that are, say, like $2, $3. But, I mean, I still like to see bid follow-up or soaking, kind of absorption on the bid. But, yeah, I mean, it came up. It came back down. Here's the pop at 933, and I just see bid stack, bid stack, bid stack, and I'm just like, I have to go in. It's pretty much what I said. It's like I have to go in, and then yeah, instant continuation, nice. Not a lot of orders on the book up until 6. I was going in at in the 50s, in the around 50 cents and a little bit above it, right? And then just super nice. And I was like, man, I was really hoping for a push to at least 70, right? Because that's kind of where this painted lower high level was. So I was like, oh, it'd be nice to get to 70. But I started to de-risk a little bit because I saw some higher low propping going on, right? And at market open, when you don't get aggressive continuation, you do risk higher lows getting cracked, right? So, I was telling and I added, this was a nice pullback into the 1 minute 20, 1 minute 50. So I actually added a lot of my shares that I sold on the initial push. And it was really nice, like these nice quick pullbacks. Look at the volume come in. This is so bullish, especially given the market conditions, right? In the book, right? One of the best things you could ever see when you're longing is seeing good volume become even bigger, right? You start to get like, it has to be good enough for me to long. Because the problem with longing stocks that are only trading like 100K, 200K per minute is you could get lucky. A bunch of volume in a stronger market could come like relatively out of nowhere, and a stock that trades 200K per minute could start trading a million shares per minute. And those, if you get in on those, the reward potential is massive, right? You're talking 100% sometimes in less than 5-10 minutes. But it's low odds, right? I rather have something that has good volume, get in on a good book signal, and then if more volume comes in, I'm like, oh man, it's even better. It's just even better. Um, had this quick pullback here, and I was like, you know what? There was a big bid at 50 cents. I figured if this cracked 50 cents and this low over here, that it might fade at least in a 1 minute 200, or and essentially the market open long might be broken, right? So which is funny. I saw this walk down. I'm like, oh man, like I guess I just made, I took some off here, took some off here. I was like, it's still a pretty decent trade. I was totally prepared for this to be like a smaller trade, so I just put my stop loss at 50 and I just forgot about it. Actually, I wasn't looking at it. I saw this red candle. I'm like, oh, it's probably just going to crack and roll over. It's like, I'll go look at other things. I was like looking at BDRX and plays like that. Then I come back and it's like doing this stuff. And I'm like, oh, this is a lot more interesting. And yeah, just an amazing. I took some off at that 70 level, but they just absolutely, absolutely pushed it. And then once I got stopped out, I was prepared to look for a potential short, but they just lower high this straight, lower high, lower high, lower high, just straight down. Doesn't a lot of times when I see these like here's a down halt right here, right? Or actually it's not a down halt, it's an up halt that opened lower. In certain situations, up halts that open lower can actually be bullish because they trap people before squeezing. But it just went straight down, lower highs on really strong stocks trading crazy volume. Not really the type of price action I like to short, so I wasn't really looking to short this. But yeah, I could show you. Let's see if I can open up. I'll open up BDRX because I do want to cover short. So it's like what I do want to cover how like a lot of these gappers tend to trap. And, a lot of times you play the odds. You don't know. I was short bias going into BDRX. Let's see. It turns out I actually thought on my Thinkorswim, high day was over here. So I thought this was a long trap going into high day. It turns out, I guess this was a single order up here, and I was just shorting the high day clear out, which I usually wouldn't do. But it actually ended up kind of working out for me, at least a little bit. But yeah, I actually thought this was a long trap push, and I just shorted. There was pretty much almost zero bid follow up on this. They were playing a few games, definitely playing a few games, but overall, I like stocks that are pushing. Again, I thought I was doing shorting a long trap here, but. Stocks that are pushing near the highs of their range at market open, I tend to consider to be bearish. This was a 1 minute 200 cover. They actually swiped the 1 minute 200 and initiated it. I actually thought I was going to get squeezed here. Honestly, I was not thinking. I wasn't thinking add to my short or short this candle, but also de-risk at 2. Again, swiping retail support levels is actually bullish, right? It's very common for a market maker to, come down, especially we got some lows here, to come and swipe, pre-market support levels, swipe whole dollar, right? It's very common on rig stocks that could potentially be strong to swipe key support levels before rotating back up. And yeah, once this high failed, I pointed to my room right away. I was like, this looks exactly like BJDX, whatever that ticker was yesterday, right? Where on extended tickers, this is a good thing. It's like, why wouldn't I want to you might ask, like, why wouldn't you want to long, like market open long this type of stock, right? Um, a couple bearish factors is I thought this was quite aggressive, this move. I thought maybe it could lack support to the downside. And opening near the top of its range, right? Usually the best longs are going to be the bottomed out pre-market stocks, right? Like MGRX. That's a much better pre-market structure than something like this, BDRX. And the thing is, it's not that gappers can't push, especially in this type of market. But when they do push, I always say like the entry is often super manipulated, right? You're not going to get, you know, on a pre-market dump pattern, you could get like big volume, 1 minute 20 support. Sorry, big volume. This is market open. 1 minute 20. Like this is market open. Here's the 1 minute 20. It catches the 1 minute 20 and rotates, right? That can happen on bottomed out plays in the pre-market. But on plays like this, the longing up here is super difficult because, the entry tends to be super counterintuitive, almost impossible to read. But we got potentially, here's an aggressive, here's an aggressive push, ends up long trapping. Here's an aggressive push, up only aggressive push, ends up long trapping, swiping levels, right? But the entry ends up being, I was like, hey, on these like long traps that turn into short traps, what they'll do, and we saw this on, the other ticker yesterday, was they'll come and they'll swipe support levels and then rotate it back up, right? Like, it's pretty rare. It'll just like do a shallow pullback and squeeze, right? They're gonna like on manip tickers, they can do deep pullbacks and then squeeze, right? That's why they're super choppy, super abnormal price action. Like, you can tell right here. Like, look at this entire move right here. And then word of advice: the more painted a lower high level is, it can be a good idea to move your risk lower to avoid slippage. Because we saw this with FFIE too, that when you get a bunch of lower highs that are all right next to each other, right, and they're all right, if it comes to actually squeeze that, you get these huge green candles, right? Because everyone has their stops all at the same place. The level's super painted, so there's a large amount of stops there, and I mean, look at the volume. Just you can in a stronger market, you can never discount lower high chart. Even on big gappers, you can't discount it, especially a market open when volume is 2 million, 3 million shares a minute, right? So it's a risk you always take, especially in a stronger market. I didn't get in on any of these other pushes. I will say something I've been tracking lately is a lot of times these hyper aggressive high day squeezes lack continuation. It's something I always known, but it can be difficult to find an ideal entry with tight risk management, especially when it tends to do stuff like this, right? Like, who knows what's going to happen with this play. So, but yeah, I mean, when the market gets strong like this, I'll look at the biggest, I'll look at the gappers. I'll look at the gappers that are making aggressive moves, opening near their highs, doing potential long trapping. I'll look at them. But I think the real money, this is going to sound incredibly obvious, but the real money when a market is stronger is going long. And I like the bottom out pre-market plays that trade big volume, that have bids, daily support, and those can have a lot of continuation, right? 30%, 50%, 100%. A lot of times I don't really care about missing the short, right? So, anyways, that's it for today. Penny runners are strong. Bottom out plays are strong. Nice liquidity in the market. Really nice liquidity in the market. So, worth looking at. Still looking for bearish factors. Still looking for extensions. Still looking for big brain shorts. I missed the one on MMV yesterday. The up halt long trap at the top That's straight out of the low flow playbook. I actually wasn't at my computer, but I did miss. I had a chance to get into the 180s and I didn't take it. So, yeah, I'm still looking for those types of plays, but strong market open longs can be nice. So that's it for today, guys. You have a good one. Information down below about the Discord. Join the Patreon and join the Discord, and see you tomorrow.